Hey guys, welcome back. Patrick here. In this video, I want us to do a quick market update on some of the SPACs that have rebounded over the past week. If you guys remember, last Monday and Tuesday were catastrophic for some of these SPACs. The market completely capitulated on them, and they reached levels that were frankly ridiculous. Like, I have been very skeptical about them. You guys know this. Valuation's too high. Some of the sponsors are kept taking advantage of the small retail investors. Like, lots of different problems with them. But when they got under $10, some of them, like Lightning Motors, went down under $8. It got to the point where those valuations were ridiculous. They were almost must buys. So I have been loading up on a lot of them, and I hope that you guys did too, right? So now some of them, though, have rebounded, and they are back to their resistance. So where do we go from here? Like, should we keep buying, or should we be a little bit more cautious? So that's what I want us to look into in this video. I hope it helps you. If you don't mind, click the like button and subscribe if you haven't done so. Let's get started. Alright guys, we haven't looked at charts in quite a while, so I pulled out a few of them and you're going to find extremely important information here. My thesis right now is that we are in a stabilization phase. We're not going to be really exploding in value quite yet, right? We need to go through the resistances first. So you're going to see this extremely clearly on the charts when I show them to you. So is it time to go all in? Well, I already bought some last week. I bought the weeks before, but we're going to need a little bit of time before we really see surges in price, in my opinion. All right, so the first thing I do when I want to catch up on the market and figure out where I'm going to put my money is look at the SPY to see how the market as a whole is doing. And the SPY has been pretty much in an uptrend since the beginning of March. If you look at here to here, right? So the market as a whole has been doing really well. However, if you zoom in, you're going to see that over the past week, week and a half, it has been totally flat. But what this tells me is that currently there's a big disconnect between the market as a whole and the SPACs. So for the first 3 months of the year, the SPACs have been getting decimated while the market was doing really well. Now, over the past week, the market has been flat while the SPACs have been recovering. So what that tells me is that, first of all, they're not moving together, right? So that can be good or bad. Usually in the past, often if the market was doing good, the SPACs were going up. If the market was going down, then the SPACs were going down. But now there seems to be a disconnect between both. So what that tells me is that we're probably just going back to the average. That's why the S&P 500, the SPY, is flat, right? We're kind of in consolidation mode. So if the SPACs are going straight through the resistance, then that's going to tell me that, yeah, they're back and now they're going to go on a big upswing. If they're just hitting against the resistance and staying flat, well, that tells me that it's not quite ready yet. We're just going back to where we were before. All right, so I know that's a lot, so let's just go through my list here. These are some of the SPACs that I'm following. You guys have probably seen my spreadsheet before. So it's not all the SPACs, but I'm covering many of them. So far today, there were 10 that were up and 21 that were down. So overall, it was a down day if you look at the entire SPACs. So down 0.55%. Now I looked through the list, there was no real rhyme or reason for which companies were up, which companies were down. The only pattern that we could see really were that a lot of the electric vehicle related companies were down today. So whether it's the EV makers themselves or the charging stations, you know, you have Lightning Motors, Lucid, EVgo, EV Box, Faraday, Volta, all of those were down fairly big today, between 1% and 9%. When it comes to the winners, you had Tops. This one has not shown any sign of weakness since they announced the merger. So this might be a really good one to keep paying attention to. Another one that has been very noticeable is IPOE, SoFi. This one had been really hit hard, and remember, there's still a big short presence on the stock, so we're going to have to see if it can stay up, right, or if it goes down when they're attacking it, and also after the merger, you know, when there's a bigger float for the company, when there's more shares in circulation. Gambling stocks were interesting today because they've been performing really, really well. I don't know if you guys got into MGM when I did, but it's been doing really well. Kind of flat right now, but overall showing some signs of strength. Now, if we look at TTCF, Tattooed Chef, you guys know that I have a big position in this company and I added as it was going down. Well, the thing is that, look at this, right? I drew a line for it. This is pretty much what was the support before. The support fell through, and now it's becoming a resistance. Look at what happened at 1830. This amounts about to 1830, right? And today it hit that specific number and then start to go down. So we're going to have to see if tomorrow and the rest of the week it goes back down towards the lows, or if it can consolidate around that area and eventually push through. That's going to be extremely bullish. We see the exact same thing with the other ones. This is IPOE. This is one of the previous supports, fairly high, right? Around just a little under $20, so about 1970. Well, look at how it was kind of a resistance back here, and now we're not there yet. So there might be more upside to IPOE in the very short term. It might go back to 1970, and then after that, we're going to have to see if it manages to push through it, or again, if just like Tattooed Chef, it hit against it and then it goes back down. But for now, you know, I wouldn't mind picking up more shares of IPOE. Same for Lucid. This one is extremely interesting. Like, the charts don't lie. Look at these. These were the resistances, right? So this is, what is it exactly? So about $25. Well, look at how it hit it here, 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 and today it hit it once again. So 24.98 was the high, and then it was pushed down. So the charts don't really lie. Right now, a lot of the SPACs are hitting against the resistances, but they weren't able to make it through today. It's going to be very important for us to keep track of them for the rest of the week and see if they manage to go through them or if they go below it. If they stay below it, it is a good time to buy. If they blow past it, well, then you might be starting to overpay, right? All right, we're on a roll, so let's do two more. First, Lion Electric. Everyone likes this company, and they've been doing really well since they voted on the merger last week. Last week was an extremely strong week for the electric vehicle companies, which is probably one of the reasons why we saw these rebounds. Well, if you put a line on these supports, right, which also became resistances, don't forget, well, you can see that once again, we're hitting the exact same thing. They are at the resistance right now. So we're going to have to see if they can go through it. Now remember, these lines are a little bit arbitrary. You can also put them right here, which would be another quote-unquote resistance. But when you do that, you can notice that it's really this price range here between where it is at right now, let's say mid 18s and about 2150. That's kind of the range where you want to look for this company. Are they going to be able to break out, or are they going to be stuck in that range for a while, like they were around here, right? For what is it, like a couple of weeks at the end of February and early March. So that's what I'm looking for. But again, these are companies that have just recovered from the dip last week. You're not really getting a big discount now, or you're not overpaying at these prices. HYLN, exactly the same thing. Now, I put a HYLN in the good category when I made my tier list, which I published yesterday. I got a lot of comments about this one. So if you guys are interested in HYLN, again, it is exactly the same thing. Look at how it's sitting exactly on its support / resistance right now. So if you want to add to your position right now, it's not a bad time to do it, right? If you believe in this company, you're not getting a huge discount, but again, you're not overpaying for this one. Alright guys, I wanted to keep this video very short, just show you on the charts, and I hope I conveyed it right, that I'm not seeing those big breakouts quite yet. Now, we clearly broke that big downtrend that we had for the past 2 months. However, in my opinion right now, we're more trending sideways. So over the past several days, we had very, very nice upticks in a lot of the SPACs, but it's more about them reverting back to the average than just breaking out and going on a huge uptrend. For now, I mean, I'm crossing my fingers that the rest of the week, you know, they go straight through the resistance and we see massive gains. But my anticipation is that it's going to be a little bit more subdued. We're going to be trading in that channel for a little while at least. And then when we have validation that they go above those, then it's going to be time to go all in again and go with more fringe plays. But right now is a much better time to buy than it was a couple months ago. Remember the expression, don't try to catch a falling knife. And I see it in the comments all the time. People will say, hey, I bought Avi while it was going down, and now I'm down 40-50%. Don't do that. Always try to wait until it starts to stabilize. And like now, yeah, you might not have hit the bottom. Maybe you won't have the best cost basis ever. I would have preferred having Tattooed Chef at 15.50 than, you know, when I bought it at 17 or something like that. Right? But now you're a lot safer than you were before. Also, always keep in mind when the stock is at $35, if you have a 10% drop, well, that's $3.50. That really hurts your portfolio. But when the stock is at, let's say, let's use a random one that's at $15, or now a lot of them are at $10 or $11. If it drops 10%, well, that's $1 that you lost in your portfolio. So that hurts a lot less, right? So you have a lot more ways to be aggressive in your portfolio. So just keep that in mind. If you miss the bottom, it's not a big deal. Right now is a great time to buy, in my opinion. Build your position, add to your positions, and then once we end that, you know, period when it's flat and it starts to really go up and go through those resistances, well, you'll have your position and you're really going to ride that wave up. I hope you enjoyed it. There's almost no one watching the video at this point. For those of you that still are, I just want to really thank you for your support. I mean, we had a couple months that were fairly difficult with the portfolio, but a lot of you have stuck with me, and I really appreciate that, so I just wanted to thank you. And also, I might not be able to make a video tomorrow. I got the shot today, and they say that you have a lot of side effects the next day, so I might see you tomorrow, maybe on Thursday. I'm going to try to make a video on flipping items. I don't know if people are interested in that, but I've been making good money with it. So see you guys later. Thanks for watching.